What is up, dudes and dudettes? This is Dudediligence here, and tonight we're gonna talk a little bit about NNDM, okay, Nano Dimension, which is one of those very interesting U.S. government contractor. Actually, back in 2019, I'll pull it up. Back in 2019, they actually got on some very good Department of Defense a contract coming in. This is also the reason why for the past few years, especially if we're talking about like starting from 2019, if you look at the 2019 cutoff line, which was September, and then we all know that government contracts, well, just like because the payment cycle of government contracts, things gets really slow, and government like to pay you not really net 30, they like to pay you net 90 or sometimes net 180. So the effect of all government contracts actually have a 1 year lag. So you want to look at the price, the stock price 1 year after 2019. But again, we also have a COVID shock, so we got to take that account. So it's probably going to drag. Therefore, like the old NNDM investor were probably looking at a 1.5 and 1 and 2 year return period. So if we go look at this, so we want to go look a year further. So we want to go look at September 9th, 2020. To see if our investment hypothesis is right. September 9th, 2020. September 9th, 2020, $1.97, and 19 is $3.12. So the lag indicator, that's probably the time where some people will probably buy in a little bit more. And then if they want to wait for 2 years, then that will be September 9th, 2021. September, right here. Yeah, stock price doubled, but also during this FOMO train, you can also sell during this FOMO train, because when the stock price is over, like literally, let's see, so we're using 2019 as a baseline, which is totally viable because that's when they landed the contract. That's when their balance sheets are semi-healthy. This company still doesn't make a lot of profit, but its net income is actually increasing. And then they're looking at their sales channel, distribution channel, and then they actually have a viable product. Actually, to be honest, guys, it's a 3D printing company. The reason why it's not like going to the moon is because per unit cost for the 3D printing machine is extremely expensive. It's almost $500,000, so they can only land. So right now at this point, where right now this company is still in a POC stage, which means like they're strictly B2A, which means like business to army or business to military, and it's like military or defense application, because they do 3D printing on micronics or electronics, right? And then later on, as the product growth cycle and then the product cycle mature, you will see in the next 2 years, 3 year, or maybe 5 year, you will see a move to B2A or B2M to B2B. Some other company might be interested in, hey, like it's time to do 3D printing of electronics when the costs get lowered, and let's just say the cost of their products lower about 30%, 50%. Probably like during the next 5 years, you're aiming for the cost reduction of about 50 to 60%, even to 70%. And then we can probably see them landing more contracts and landing more, active contract with Department of Defense, active contract with different countries, and active contracts with maybe some other companies might want to experiment this 3D printing electronic sort of product line or whatever, and then you will see the stock price get increased like over time, right? But right now, because one of the considerations you have to understand is, again, in Patreon, people ask about NNDM every single day because everybody thinks it's undervalued, which actually at this point, I do think it's kind of somewhat undervalued. But if you just look at the stock price chart, you will realize that it sort of behaves like every other small cap stock. That means most likely in the next 4-6 months, or in the next 3 to 4 months, in the next quarter, especially when the interest rate hike information is coming out, right? When the Fed comes out, they're just flat out probably drop under $3 again. Right now, all of the trend, I mean, again, I'm not a trend investor, but if you believe in trends, this trend is indicating it's probably going under 2.5, like around 2.5 line. If you just looking at its active, sort of how much revenue it's traded at, 10x, 100x, or whatever, how many outstanding shares are there, you're looking at it, the stock will probably go back down to where it's probably at beginning of 2020. Or where 2019 was at. So 2019, the baseline we're looking at is about $2.6 to about $3. So that will be where the stock will be trading in the next 4 months to 5 months. And then later on, depending on how good the economy, and it's probably going to trade flat all the way until there might be any catalyst or any good things coming out. Again, if we compare NNDM with, MMAT, it's actually totally a different thing, because NNDM is actually a CAGE certified Department of Defense vendor. That means they actually have a viable product, A, and B, they have viable revenue. Their revenue are increasing. And then if they, the CEO is pretty smart, they have a really, really great, let me show you this. We can probably make an in-depth, not really tutorial, but in-depth analysis or due diligence on NNDM, this company. And again, all of these patents and applications in this company actually were worth way more than what MMAT would have, because a lot. And then if you go look at their actual scientists that work for this company, they actually have a huge, they have a very fantastic intellectual property portfolio and intellectual worker portfolio and scientist portfolio within their company. Their CEO is pretty smart. They recently acquired a company. So this price drawdown we're seeing here is actually reasonable, because whenever the acquirer acquire a company, which is the acquirer's shareholder value will drastically going down because they actively spend cash on something. That just means their active cash generation, the previous cash generation basically got cut off, and then the later cash generation is pegged to their acquisition, and then we sort of, all the active investors sort of gonna reevaluate this company, and because they don't have as much cash as before, therefore their short-term shareholder value would decrease in a sort of a medium-term to short-term horizon, especially when the interest rate hike risk is really there on the horizon. Okay, this is for this video. I've already outlined where the stock basically is gonna go. I'm not really bearish or not really bullish on the stock. I think it's normal to trade it around $2.5 for NNDM, especially there's not going to be a huge contract coming in, or there's not going to be any really huge press releases. And with a bunch of investors trying to trim down their portfolio, especially trim down their risk, you will see small cap stocks like NNDM and maybe even Robinhood and a lot of all these meme-ish basket or small stock basket, high risk, high return sort of stock getting trimmed down over the next 3 to 4 months. And then later on, somewhere around June or July, when quantitative easing is completely stopped, and then when the Fed is already finished trimming their balance sheet, and then when interest rate hike sort of finished, because we're expecting a 4-way to 6-way hike this year. So then according to research, according to previous data, we're looking for a sort of like a active rebalancing act or active rebound act somewhere around June or July, depending on how cash flow of the entire market goes, whether there's going to be a stimulus check or there's going to be new capital flying into the American market. If there are going to be new capital, then we're going to see a sort of like a rebound off of our previous lows. But right now, the outlook of all these small cap stocks are pretty dim. It's not really a really fantastic time to buy back in if you guys are eager. I know you guys have dry powder, but for the best of it, it's actually not a good idea. But again, we're not financial advisors. We do not get financial advices, and everything we say on our channel is for shits and giggles. Anyways, if you wanna have a daily chat with us or have someone there to answer your questions on a daily basis, you can join our Patreon. In Patreon chat, we actively discuss tickers unless we're sick. For example, I was sick for last week, and this week I'm getting better. You know, the ibuprofen is taking an effect on me. And there are some Patreon exclusive contents like, you know, trading plans that's going to be coming out next week, or, you know, in the following days or week. The first trading plan we're going to make is probably for GME, and then we're going to make some trading plan for trading oil, right? A lot of people are in PBT, and I really want my subscribers and my Patreon members to understand that a lot of times our prospect of what stock's going to increase doesn't really matter at all. What really matters is when you're going to exit, and then you have to set up a good exit line, so then you won't have the feeling of, oh my god, I should have stayed for longer. A lot of times when you have a good exit strategy, you have to erase the feeling that, oh my god, you know, if I just stayed for 2 or 3 days more or whatever. Especially when you're trading options, or when you are trading a huge amount of shares. It's a really bad habit to have. But anyways, I'll put that into another video for you guys. This is just the NNDM video. I know I should have probably posted something like this like a month ago or something, but you guys know I have shitloads of other stuff to do. And thank you so much for you guys' support. If you like those kind of videos, smash a like button and subscribe. See you guys on the upside.